Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 6th of January 2022, and we're producing our regular morning update, providing prices, news, and economic data. Today's news is destabilizing, as we see most investment markets down after the publication of December's FOMC minutes yesterday. So let's take a look. Welcome to Illuminati Silver. It's Thursday, the 6th of January 2022 at 10:46 in the morning. The news today, destabilizing. Yes, what happened yesterday concerning the Fed's minutes has destabilized equity markets, cryptocurrency markets, bond markets, and also gold and silver prices. We can see on the headline today, US futures steady while Fed shock batters bonds. Markets wrap. Fed minutes flag chance of earlier hikes. Balance sheet rundown. Treasury rout goes global as Fed opens door to faster tightening. And on the left here we can see UK inflation builds with companies planning 5% price increases. So, a sell-off in US equity index futures subsided and European stocks paired a decline as investors bet the Federal Reserve's faster than expected policy tightening will still leave opportunities for equity gains. Treasury yields extended a spike. Minutes from the Fed's December meeting showed officials increasing preference for a faster path of rate hikes and a shrinking of the bank's $8.8 trillion balance sheet. That could bring curtains down on unprecedented policy accommodation, which underwrote asset prices through the worst of the pandemic. The Fed is now at the core of the investment outlook for 2022, overriding continuing concerns such as slowing global growth, China's regulatory crackdown, and supply bottlenecks. So they think the economy is going to do well. Fed minutes flag chance of earlier hikes, balance sheet rundown. Federal Reserve officials said a strengthening economy and higher inflation could lead to earlier and faster interest rate increases than previously expected, with some policymakers also favouring starting to shrink the balance sheet soon after. Now, how many YouTube pundits have said, this is impossible, rates will not go up, they will not cut back on their lending, they will not cut back on their balance sheet. It's impossible for them to do so. We've taken a slightly different view, but we fully accept there is only so far they can go. Participants generally noted that given their individual outlooks for the economy, the labour market and inflation, it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. We'll have a look at economic news in just a second, which supports this view. However, on the BBC, Next warns of higher prices as costs rise. Electric car sales soar, but chip shortages bite. So if you're investing in anything equity-wise, maybe this is the sort of area one should still consider for the future. And how about caviar sales soar as more people get a taste for posh fish eggs? I actually despise caviar. Just give me a normal egg. US and Canada. Biden to blame Trump for Capitol riot 1 year on. Maxwell lawyers want retrial over jurors' comments. And China Mobile makes Shanghai debut after US exit. Let's see what's happening financially, because this is why we're really here. Dollar index, a little surprising, marginally down. But still holding above the 96 level at 96.11. Oil prices, unfortunately, going up again, nearly $1 each. So we've got WTI crude now approaching $79 and Brent crude at 81.65. Equity markets, as mentioned, took a tumble yesterday. We can see in the United States markets were down 1% for the Dow, 2% for the S&P, and over 3% for the Nasdaq. That's quite a hefty fall. But we have to also bear in mind they've all been very near their all-time highs. Asia Pacific markets overnight broadly down 2%, except for the Hang Seng index, which is up. We always seem to find that the Hang Seng moves in the opposite direction to Tokyo. And European markets and UK this morning broadly down. The FTSE doing the best of a bad bunch, down only 0.4% so far, but the other indices down around 1%. Now, what is supporting the FOMC minutes is the improving figures of the job market, at least according to the ADP employment report yesterday, which suggests 807,000 additional jobs in December, compared with an expectation of 375,000. And also, whilst the ISM manufacturing and the market manufacturing indices were marginally disappointing, the market services PMI is marginally encouraging, actually higher than expectations. But what moved markets yesterday were these FOMC minutes. Now today we have the initial jobless claims, trade deficit, the ISM services index. It'll be interesting to see how that compares. If it's following the market services PMI, it may be slightly higher than 66.8 and maybe even as high as the previous month. Factory orders for November are due and markets are expecting an increase. But it's tomorrow that the key data that will move markets the most, if it is wide of expectations, and these are the non-farm payroll, coupled with the unemployment rate and average hourly earnings. And also, let's not forget, we also have consumer credit coming out in the later afternoon. So what's happened to gold? I'll just refresh the page. Gold is down $16 at $1,802. We've said 1800 is an important threshold for gold. It did dip below that. It went as low as 1794. It's been as high as 1829. It's currently 1802. Interesting, because obviously the fear of interest rate rises is having this knock-on effect against acting as a headwind against gold and silver. One would have thought silver would have been hit by that, but then encouraged by the economy potentially picking up, though there's no hard evidence of that really quite yet, although the employment figures seem to be improving. Silver actually dipped as low as $22.16 today, having been as high as $23.27. We currently see silver trading at $22.41, below that quite important $22.50 level. We suspect $22 will probably hold, unless, of course, on Friday we find that the non-farm payrolls go through the roof. Then we may see that $22 break. If it doesn't, and it's close to expectations, then we are going to expect to see silver trading between $22 and $23. Cryptocurrency markets taken quite a hit. And this really belies the fact when people say Bitcoin is digital gold or is a great hedge against inflation. Well, we've seen that Bitcoin fell 8%, even though equity markets only fell 3%. And what we have noticed to some degree is that when equity markets fall, cryptocurrency markets also fall. And the overall market is down 9.5% in a day, which is what makes cryptocurrency investing both exciting and worrying, to say the least. But we still have a global crypto market cap just above 2 trillion. There might be quite a psychological effect should that market cap fall below 2 trillion. Maybe those who are hanging on to 1,000% gains, hoping to get 2 or 3 or 4 or 5,000% gains, may eventually give up the ghost and start to sell. And if that does happen, then there will be a rout on cryptocurrency prices. We're not there yet, though, because people are still hoping that things will pick up in the months to come. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign. Have a great day, everyone. Until tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.